Good morning, welcome to Wednesday. Okay, here we go. I'm going to have a look at gold and silver. I've decided that gold and silver are going down. I've been quite negative on gold and silver for quite a while, actually. I was a bit confused with this sideways action in gold when we had such a clear double top pattern with that long upper wick candle a couple of weeks ago. A couple of months ago. So that to me was just a very clear negative signal. And then sideways action, it didn't negate the negative signal. I just couldn't understand why gold wasn't really collapsing, especially with bond yields going up, interest rates going up, blah, blah, blah. Anyway, now we've broken back through 1925, 1920. This does look pretty negative for gold. We are heading towards my target of 1890. We've hit that already actually this week. It's a very minor support level. I can show you that on the short-term charts. There's a reason why that has held, so I can show that to you. But I don't think it'll hold for long because the big picture is negative for gold, in my opinion anyway. So going back to the daily chart now, there's no pattern here at all. If you were just to look at the daily chart, I personally can't see anything clear to tell me where gold is going. We broke below this trend line and then sank, obviously. That's not the strongest signal. So I'll show you in a minute why we've held 1890. For me, the resistance, as I said yesterday, is in the 19, sort of 13, 19, 17 area. I've got 19, 15, 19, 16 or 19, 17 here. For my trend lines, I'm figuring that this will be a decent resistance level. Now, when I also put some Fibonacci levels on here, that kind of backs up my theory that this is a decent resistance level. Look at that, the 23.6% fib. I don't know if you can even see that. So there we go. Maybe if I blow that up, you can see that 23.6% fib is bang on 1915, 1916. So it just ties in nicely with all these little lows, which is a nice resistance band. We didn't quite get there yesterday. We got to 1911, but that definitely is my first resistance of the day. If we get up through sort of 1920, well, then we could make it up to 1930, 1933, but we'll worry about that tomorrow if it happens. Now, if I magically switch to the 4-hour chart, this tells you why we've got support around the 1890 area. It's only on the 4-hour chart, 61.8% fib. When you take the low from down here, which is around 1780 at the end of end of January, 28th of January, that swing low up to the swing high at 2069 gives us a 61.8% retracement at around 1890. And that just also happens to be around these little swing lows, these little spike lows actually, 1894. This one, the March low was 1889.5. So we've got a little bit of support there, and I put a trend line on there just to sort of emphasize that. And then we've got the 500 period moving average on the 4-hour chart, which is the green line, also lending support to that level. So there's kind of three reasons why that is a very short-term support level. I can understand why it's holding, but I don't think it's going to hold forever. It could hold again on the next test, give us a very small double bottom on there, which would be easier to see on the hourly chart, but I'm not going to put it on there for now. And then we bounce back up to that sort of 1915 area, which is resistance. Maybe then we turn around and plunge down through the 1890 area. Just a possible scenario that could happen in gold, but ultimately I do see gold going lower. Sticking with the 4-hour chart for silver, silver's already trading below the 500 period moving average on the 4-hour chart. Got some negative crossovers there on the 4-hour chart too. So if anything, silver actually looks weaker than gold. When you look at silver on the weekly chart, we're now below the 100-week moving average, the 50-week moving average. We're below this trend line that goes back to the beginning of last year, so that's over a year old. That I thought would have been a good support level, but we really just sailed through it. So that told me that silver really did want to go significantly lower. That's actually around the 2440 area. I don't think we'll see that again for a very long time. When I go to the daily chart, we had a slightly shorter term trend line, which only goes back to June of last year. That came in at around the 2380, 2390 area, coupled with the 100, 200 day moving averages. We had a little trend line here once all this cluster of support was broken, told me that silver wanted to go down. So yesterday I had a sell level at around 2380, 2390. We got to 2395 into a short position there, and as long as we hold below there, it looks like silver's going to sink. Easily you could get to $23, $22.90 as just the first target. That's not a strong support level, not particularly significant. Works well as a target. That goes back from through to December, joins the low at the beginning of February. So for me, it's a target that ties in with a longer term fib level at around $23, $22.90. So that really is my first target. We'll see what happens when we get there. Might get a little bounce, but I don't think that level will hold for too much longer either. We're getting into oversold territory on the slow stochastic, but we're not deep enough into it for me to be concerned about being short silver at the moment. Okay, I hope that helps you with your gold and your silver trading. If you don't agree with what I'm saying, please put your comment in the box. I'd like to hear what everyone else is thinking about gold and silver. And please do like, please do share, please do subscribe to my YouTube channel so that when I release a video, you'll get notifications straight away. Thanks very much.